Welcome everyone to the March 21st share review update for blue chip shares in our random sample of shares we're choosing and following, namely some shares from the US, Europe and Australia, and we'll go through those. Now there's been some stability potentially, but also a few broken trends. Before we go any further, please feel free to subscribe and click on the notification bell for future updates, and click on the like button if you like the videos. But more importantly, in terms of understanding the strategies we're using, if you go to the Pete's Investing channel, under the playlists, you'll see our weekly share updates. We post the share updates every week and the index updates every week. But we've also got a playlist for strategies we're following. And that covers in more detail which shares to trade and following a simple trading strategy, the average down approach, and we've got a couple of videos there explaining that in more detail, and some money management tips for you to follow. So firstly, let's go look at our profitability on the shares we're tracking, and these are the shares we're tracking. And these dividend yields are taken from the Yahoo Finance, and they're basically dividends for those that are new to the markets, so basically just interest earned every year for each of these holdings you have. And they're the dates those will be made ex-dividend. So if you hold the stock on these dates, that's when you'll get paid that dividend in the following days. This is a profitability over the rolling 5 months for the buy and sell strategy we use. Then I'm also comparing to the buy and hold strategy, how the buy and sell strategy compares. So just to quickly summarize, again, we're looking at a 15-minute chart. This is Telefonica from Europe. So over roughly a 5-month period, we're tracking the share prices here. This is our profitability chart for the buy and hold strategy. This is our profitability chart for, the buy and hold strategy is here, and the buy and sell strategy is up here. You can see here the profitability baseline, they both start at $100,000 each. So the buy and hold strategy, you can see here, is in the red, below the 100,000 baseline, but the buy and sell strategy is broken up once the trades are closed based on this accumulation here. So as you can see here for Telefonica, it's generated $2,300 over the 5-month period, and that's represented by that number there for buy and sell strategy, and a profitability for buy and hold is shown here. So it's less than $100,000, so we're down 564 euro, not dollars. This is euro because it's a European stock. Now the maximum drawdown is 43.63 euro, and 43.63 is basically looking at the biggest drop. In this case, would have been roughly from there down to about that point there. That's a profitability drawdown before it recovered and made a profit. That in essence is the strategy we use. We accumulate, and here it shows the number of shares we buy, and each time we buy $2,000 worth, or 2,000 euro worth of shares. Here we are buying only the one lot of shares, and it's represented by the blue line down here. So we bought 360 back here, and that's why the profitability hasn't accumulated. So in the 5 months, we've made 2,300 euro for Telefonica for buy and sell, versus buy and hold, we're down 564 euro. And that 2,300 equates to $165, that's 165 euro a month on average. And the start date is basically looking at, if you look at the date down here, it shows there 9th of January 2020, and that's just putting in that, so we calculate a number of months, so we can calculate a monthly average. So that's Telefonica. Now Telefonica, we haven't talked about what's happened in the last week. As you can see here, we bought our initial position back here, middle of January. It only bought one lot of 527 shares. Again, don't forget we're buying $2,000 lots of $2,000 worth of shares. So that $2,000 is equivalent to 527 at $3.79 per share. So we bought that 527 shares. We held it up until that point where it closed out at a profit. So we closed out at a profit there of 23.08, and back here it opened profitability at 21.99. So roughly $200 or €200 worth of profitability made. Now what it's done here as well, you can see here I've drawn a trend line. It's gone actually upwards compared to the indexes we saw in a previous video, and it's basically bouncing off that trend line. So let's see what happens in the coming days. If it breaks below that, we may see further downside for Telefonica. But we've got no open positions at the moment, so we're quite safe on that trade. Next, we look at the Commonwealth Bank of Australia. And again, we made 829 over the 5 months for buy and sell, and 117 for the buy and hold, with 531 drawdown. So Commonwealth Bank. So again, let's look at the long-term 5-month period, actually 18-month period, roughly. You can see here they both opened up back here. The buy and sell had a few accumulations, and that's up $829. And the buy and hold has finally broken the uptrend above our baseline for $117 profit. Again, it's only holding, we're not selling this one, we're just holding it. You will notice though, and Caterpillar is a good example of this later on, if the share price keeps going upwards, the buy and hold strategy works better. But most of the time, share prices will go sideways and then make some nice upward movements like it did here. But overall, so far, Commonwealth Bank is more profitable for the buy and sell strategy. What it's done in the last week, as you can see here, the previous few weeks it's been in a bit of an uptrend, but buying it back here, we bought 23 shares, which is $2,000 worth of shares. We bought 23, and it's broken down. Our profitability's taken a slight hit. As you can see here, in the last week, it's broken below our trend line there. So let's see how that performs in the coming days and weeks, whether it continues according to the index we saw in the previous video, or whether that's going to continue in a downtrend. Next, we'll look at BHP Australia. Again, 743 for the buy and sell strategy versus 180 buy and hold. So BHP. That's continued in a downtrend and broke below our trend line. So that's not a good sign. And we opened up back here. We bought 40 shares at $49 each. So since buying back there, it's broken down and broken below our trend line. It bounced off it there. You can see there. You can see how it's sort of gone through that axis there, and it's broken below our trend line there. So let's see if that breaks above in the coming days. Next, we'll look at JPMorgan, a US stock. So JPMorgan, $13.88 for the 18-month period on average, 18-month period. And we don't want that. And it's made $13.88 buy and sell versus $7.58 buy and hold. So $13.88, $7.58. As you can see here, because the price has gone upwards during this period, that demonstrates that that has a better profitability for the over the long term. But as you can see here, the price has gone sideways most of the time. And that happens 80% of the time for most stocks. In the past week, it's broken below our trend line like the other stocks, so that's not looking promising, but again, it's part of our strategy. We're not going to panic. We bought at almost the peak there. We bought 12 shares at $160, and it's fallen below our trend line. We've got those positions open there, 12 stocks at the moment. Next, we'll look at Volkswagen. So over the long term, you can see there it's gone sideways most of the time. It's had a nice pickup in the last few weeks. Profitability at $17.45 for the buy and sell strategy. Profitability at $12.00 for the buy and hold. Now, if it was doing that over the 18-month period, this would be a much bigger winner. it accumulated back here for the buy and sell strategy, hence it made profits, and it made singular profits here as well. What's happened in the past week has been pretty positive for Volkswagen. Last few weeks has been accelerating according to this trend line. It's coming back towards this trend line. It hasn't hit it yet. Let's see if it breaks below it in the coming week. But it's made a slight drop from its peak back here. Let's just keep following that. But it has closed out at a profit. So we're not in the trade at the moment. So even if it breaks below that, we're quite safe on Volkswagen. Next, look at Johnson & Johnson. Let's look at the long term first. Again, this has been a pretty strong performer over the past 18 months. Had a bit of a dip there during COVID, went sideways and it recovered and went upwards. And that's why overall it's done quite well. Had you bought and held it at 578 profit versus the buy and sell strategy at 380. The reason in this case that's made less than the buy and hold is because we closed out these positions to take those little profits. Like here, for example, we took a profit from between there and there. But in this case, the profits kept rising for the buy and hold. That's why it's outperforming. So if you left it in there, if it kept going upwards, the profits keep accumulating. Whereas the buy and sell strategy closes out according to our strategy. So you're stopping any further progress in terms of profitability. Now, what it's done here, you can notice here, it's been a bit of a consolidation in this period in the last few weeks. It's broken above there. It may well come back down, but we want to see it go high from where it is there. Give us a more positive outcome. Lastly, Caterpillar. Again, very similar to the previous stock. This is coming close to performing the same as the buy and sell strategy, 1708 for buy and hold versus 1948 for the buy and sell strategy, mainly due to that accumulation back there. So that's, you can see there the profitability very similar with a drawdown of 1548. In the past week, it's coming back down towards our trend line. So hopefully it goes and bounces off from there. And we'll see what happens in the coming days and weeks. Okay, that's our summary on the stocks we're following. Again, these are just a random sample of blue chip stocks. Remember, go to Pete's Investing channel and refer to these for further information about how to choose the stocks for the blue chip shares we're choosing, how to follow the simple strategy, how to use the average down approach, and for money management to help so you don't blow all your money into the market and you drip feed it into the market as required. Remember to click the subscribe button, the notification bell, and the like button should you wish to like these videos. Feel free to provide any further comments and we'll speak to you guys in the next week's review. Thank you.